Hello traders, in this particular video we are going to be diving into volume profile trading. Okay, we want to learn how to identify high probability POC reversals. All right, so if you've ever wanted a systematic way to spot where the market is likely to reverse, then this video will break it down step by step so that you can use it on your charts immediately. All right, now we're just going to be starting with the basics. Volume profile trading is all about understanding where market participants are most active. All right, when you're trying to understand where market participants are most active, you are likely tending towards the volume profile trading, right? Instead of just looking at price, we focus on volume at each price level, which tells us where buyers and sellers are concentrated. Okay, all right, so we're just going to be using one of the volume profiles that are accessible. Okay, we want to make use of an indicator, because indicator makes things easier for us, right? Okay, so the key concept here is the point of control. All right, the POC. This is the price level with the highest traded volume within a session. All right, let's see if we can also add another indicator. Okay, all right, so you can see how both indicators are talking about concentration of volumes at different price points, right? So basically that's what volume profiles are about. Okay, now why is this important? Because areas with high volume tend to act as strong support or resistance, creating zones where price is more likely to stall or reverse. Now, once you have plotted your POC, that's your point of control, right? The next step is to identify high probability reversal zones. You have to look for price approaching your POC after an extended move. Okay, when you have an extended move, for example, what we can see happen here, probably just look out for price approaching the POC. Okay, probably coming down, closer towards the zone. All right, then that's going to be followed by a spike as the market changes, or rather, you have to look for price approaching the POC after an extended move, right? And then if the price reacts to this level, the POC level, with hesitation or maybe rejection or a cluster of volume, it signals potential reversal. Volume confirmation is key here. A reversal is more likely if you see decreasing volume approaching the POC, followed by a spike as the market changes direction. So this combination makes your entry points more precise and structured. Now, timing your entry around POC reversals is critical. You have to wait for price action confirmation, such as rejection wicks, engulfing candles, or any other reversal patterns that you can find near the POC. All right, combining this with volume spikes gives you confidence. Okay, when you combine this with volume spikes, it gives you confidence. Okay, so yeah, this is a POC color for that. Just wanted to. Okay, so you can see that our POC, our point of control, is red with this indicator, and point of control is kind of orange with the other indicator. Okay, so yeah, so that just, you know, making it a more understandable, okay, for you to know the exact levels that we are referring to as our POC. All right, so you need to always time your entries. You wait for price action confirmations. Don't jump in too early. Remember that POC is a zone and not an exact line. In as much as these indicators, you know, we'll use a line to represent it, but remember that it's a zone. All right. So you have to watch for the markets to interact with it and show a reaction before considering an entry. Patience here increases your chances of catching a strong high probability reversal. So once you are in a trade, your POC level becomes a reference for your stops, your targets, you know, and all of that. Just place your stops just beyond the POC if you are going long. Like if you had to enter a buy trade around this, you know, this zone, as we can see, we had price approach our POC. We had a rejection candle around here. Let's just zoom in a bit. We had price approach our POC, right? We had a rejection candle around here. So if you are going to enter a buy trade, perhaps after your candlestick pattern, ensure that your stop loss must be below that POC. All right, that's for a buy trade. If you sell trade, the stop loss must be above the POC, right? So you're going to be using your POC, you know, as reference points for those, you know, important, you know, price areas, right? And then for your targets, you can reference perhaps other key levels on your chart. Okay, you can just probably go to a higher time frame and find the reference point for your take profit. It's always important to have a reference point, right? It's so that you can always trade in line with what price is saying. Okay, so make sure you always have a reference point. Okay, so this is just an example. All right, you can place your stops just beyond the POC if you are going long, or just above it if you are going short. This keeps your risk defined and your trade management clean. So using volume profile trading in this way helps you stay disciplined, read the market visually, and avoid emotional trades. By respecting the POC, you are aligning with the levels where the majority of traders are active, giving you an edge in anticipating market behavior. So that is the volume profile trading method for identifying high probability POC reversals, right? It's a clear, structured way to anticipate reversals and make informed trading decisions. If you found this video helpful, make sure to like it, subscribe, and turn on notifications so you don't miss more strategies like this. Start applying these concepts on your charts and see how POC reversals can help organize your trading decisions. Stay tuned for more. Happy trading.